Without further ado, I do want to bring on our special guest, Steve Giordano. So he is Executive Vice President of Health and Wealth based out of Florida, and he has been #1 producer in all of FFL. Last year, he wrote over $1 million on his own pen. So he is going to join us and just share a little bit about what he does to be successful. How are you doing, Steve?
I'm awesome. How are you?
Very good. Appreciate you jumping on. I know it's been very fast and furious, so we're going to make today a pretty quick call. So I want to try to get as many nuggets out of you as possible. Tell us a little bit about how long you've been in the business and just, your background.
Yeah, I started in part-time November of 2018, about 2 months. Came from a full restaurant industry hospitality background. Did that for literally from the time I was 16 until I was about early 30s. So now you figure I went full-time February of 2019. So we're coming up on, it'll be 3 years in insurance, and only at FFL. I was never anywhere else.
Wow. Okay, great. And then were you always producing at such a high level? Like, did you just come in and you were just a phenomenon and writing that high, or did you have a learning curve?
Yeah, I think my first month I did about 21, first full-time month. And then it was like 21, 34, 57, and then 80. And so that first month, 3, 4 kind of took off from there.
I think anyone on this call would be happy with your learning month being at 21,000. So, what did you do to set yourself up for success? Like, are you just a natural or what?
I feel like I fail a lot, and I just keep continuing to fail forward. So I think anybody new, you really have to look at it that way. Like you fail more than you succeed doing this. I don't care if you're me or if you're anybody else. But I think what sets people apart is the ones that can continue to fail to find the wins. But a lot of people, they'll fail and then they kind of crumble and they don't know what to do. Where I think my mentality has always been like, I kind of know the way it's going to go. And I learned early on the amount of times I'd fail, but I just kept going, and you find success. And the other thing I'd say is I think this is a think and grow rich kind of a game, where the more time that you can feed yourself in non-money making time, like outside of your dial time and run time, to feed yourself to get better, podcasts, trainings, talking to top people. I did a ton of that, and I tried to just be a student of the game, and I think that really helped me.
Now, have you stopped doing that, and now that you've been here for so long?
Never. I literally yesterday on my Slack, I posted to my team, and I wrote 24,000. It was a good week, whatever, but I had a ton of no-shows.
Oh, no big deal. Just 24,000.
Yeah, right. But as I looked at it, I'm like, I had a ton of no-shows. So I posted, I'm like, I have to be better on the phone tomorrow. Like, I had too many no-shows. I could have wrote 50. So my view is always, if you ever think that you have it all figured out, I don't care who you are, you're sadly mistaken. You always have to get better doing this job, hiring or selling.
Right. Do you think that you have a better in-home than most, or are you just consistent?
No, I think my in-home is as bland and basic as it can be. I think that helps. I think the person that tries to make it this magical thing, you'll lose people. One thing that I learned early on that I focused on was like the client that we serve, right? Middle American client. They're not an upper tier for the most part client where they have a high net worth, because those people already have a financial person. So you have to know your audience, and you need to cater what you do on the in-home to that. So the KISS model, keep it simple, stupid. Like, I need to keep things crazy simple, because I need to keep people with me the entire time.
No, that makes perfect sense. Now, with your in-home, are you dealing with a lot of objections, or how are you overcoming those in the beginning?
Yeah, I try to eliminate in the beginning by getting buy-in pretty much when I first sit down to say like almost like a probing question where I'm saying, all right, Mary and Bob, I'm assuming I'm here like I am with everybody else, because if one of you doesn't come home tomorrow, the other one is going to be in a very bad financial scenario. Would you agree with that? So I'm teeing them up. Like, what are they going to say? No, I'm totally teeing them up.
Right.
And then you might get the old, well, I wanted to know what it did or what it cost. And I kind of just play it and let it roll off my back, because people try to sell us, right? So I tell new agents, you're either going to get sold or you're going to sell. Like, you need to sell. Don't let them sell you on what they thought it was or all these things. Don't let that cripple you. It's the same thing on the phone. The minute people will say things that are things that throw you off, the good ones, they're just like, all right, cool. What's next? What's next? What's next? They're not letting that like punch in the gut get them down. So I think on an in-home, I mean, look, I get objections like everybody else, but I think you try and get in front of them, let them know why you're here and what we're looking to do. And then I think questions are your best friend. If you ask great questions around loss of finance, because to me, that's what insurance is, right? It's something that protects you against loss of income at some, gut juncture for somebody. If I can focus on the questions around that, I become a great problem solver. And then I'm selling you in the way that's solving your problem. I'm not walking in and like, here's 17 different companies and all these different products. And I'm selling you like Cutco knives. Like I'm not, if you do that, you're going to lose, because then you're a sales guy. If I come in and I'm like, I need to fix your problem in an affordable way, they're like, oh, well, that's different than things that I've heard before. So that's kind of my approach.
Just standing out. I love it. I love it. Now, I think that we have a lot of new people on the team, just across our agency altogether. And I think consistently we're seeing a lot of the same objections. And I think InHome, there are two specifically that new people are struggling with. And one is the think about it. So how do you handle that?
I will, in the beginning, after I get the agreement on what they're, why I'm there in a sense, right? So teeing that up, I will let them know this is going to be simple. What we're going to do today is we're going to figure out your needs and budget, health, who is going to take you. So I think a big thing for new agents, you need to make this where it's not them buying a car. Like, not everybody gets it. If I walk into the house and you have COPD, like, we're limited, or if you have whatever. So I need to create urgency around, will someone take you? Because people want what they can't have.
Okay.
So when it comes to that, I'm then going to say, what we're going to do is submit an application to a company. We're going to agree on a price point, what's affordable, go through your budget and your health. And then we're going to hope and pray that somebody's going to insure you. And I don't care if I'm doing AIG. They don't need to know that it's guaranteed. There is no guarantee in my mind. So you have to play the psychology around, this company needs to approve you. And then, look, the end of the day, are you going to have, like, let's say, when you submit some stuff, are you going to have some cancellation to it? Yes. But my view would be this. If I don't get something submitted, I have zero shot, because I'm never going back. I'm not. I don't think I've ever went back. And if I was stupid enough to rebook the appointment, they no-showed me.
Right. No, I see it all the time. In 10 months, one person called me back, and I'm no joke. When he called me, he said, "Yeah, this is John. You came out last week." I'm like, "Did I sell you a policy?" I was thinking that there was something wrong. Like, I thought he was going to cancel. He's like, "No. You just took his numbers, and me and my wife want you to come back out." And he's like, "I'm like, come back out, like, to your house to like do what?" He's like, we're ready to make the move. I was so thrown off that I couldn't believe that someone called me back. So one time ever. So, and you're saying none. So it's true.
Yeah, it's like 1 in a million. Yeah. 1 in a million. You're better than me that you got one.
I love it. So literally you're saying take the charge back versus no application, because at the end of the day, a chargeback, at least you were advanced, at least you had an opportunity, versus not pushing hard enough and not challenging your client, and then you get nothing.
Right.
Okay.
I gotta at least give myself a shot. I have to give myself a shot,
Yeah.
And you have to let it be known that they have to approve you, like that's part of the game here,
Yeah. Yeah. No, it makes sense. The other thing I think they're struggling with, and I don't know that I've even learned how to really overcome this, is that age group, probably 30 to 45, where they think they're invincible. Nothing's going to happen to them. I'm healthy. Nothing's going to happen to me. So they don't really see the value in life insurance. And I get it. Some people are not going to buy, but what do you do in those situations?
Yeah, those are good ones. You have to create urgency around. Obviously, we have great products with living benefits, so I'm a living benefit guy. If I qualify you and we can get living benefits, like I'm gonna be pitching that all day long. I'll just start like asking uncomfortable questions in a respectful way, like Mary, Bob makes 8,000 and you make 1,000. If he gets cancer tomorrow and can't work or whatever, and I'll say those words, like you have to say uncomfortable words. What would you do? And then, yes, you're going to get some stupid answers sometimes. Oh, I'd figure it out. Well, I don't know, Mary. Like, I'm sure you would figure it out, but what does figure it out look like? Oh, I'd go get another job. I'm sure you could go get another job, but would you want to, or would you just want to pay $120 a month when they're going to give you your money back at the end or whatever?
Yeah.
I think you have to hit them where it hurts sometimes, even if that means they've never hurt because they're young and they're healthy and invincible. Obviously, on that older client, a lot of times they've had something or they've seen something in their life. It's a little easier. But on the young one, you got to make it so real for people. And I think in the beginning, the thing I struggled with was that, in the emotional perspective, right? That's emotional. If I say to a wife in front of a husband when there's kids running around, like he doesn't come home or he has an illness or whatever, like that hits home. Now you have to have the right tone. You have to say it the right way. It has to be at the right time. But I think people are then like, it's real. You need to create urgency with people. That's the only way you're going to create urgency. Urgency is created around loss, not gain.
Okay. All right. I like it. Now, the other thing I wanted to talk through with you, you obviously produce at an extremely high level, and I'm sure you know kind of the breakdown of the carriers. So what percentage would you say of everything you wrote last year was America?
There's America to write, and then there's America. And if you don't go with them, go with America. No. Last year I did $1 million with America and like 300 and whatever it was, 1,000 with AmAm Mutual, little bit AIG, and there was probably a couple one-offs in there, here and there. I'm like you said earlier, I mean, I'm going to go there first, instant decision, get it done in the house, get paid the next day, great products. I'm going there all day. And I've also like never kidded myself to think that I'm like this magical underwriter, especially in the beginning. I know that that's going to do the work for me. And I think as a new agent, you should do that 100%. Obviously, the 8% isn't bad either. And then from there, I'm pivoting typically on like the whole life to like an AmAm, because I look at it this way. You have 3 shots with AmAm on graded regular ROP. And then if it's declined, then I'm going to go like AIG, because I think for the most part, there's a one-off. If somebody's declined AmAm, they might get something else. But for the most part, they're probably going to be an AIG case at that point. Here and there, yeah, maybe a Prosperity, maybe an Aetna on certain things like COPD. But that's typically my progression on whole, on term, America. And it's usually I'll toss up AmAm or Moo as the backup, depending what it is. I feel like if it's prescription, you have a decent shot on Moo. If it's MIB, you're kind of screwed no matter where you go. Once in a blue moon, you'll get somebody through Moo and through AmAm on MIB stuff. And then I think you need to be good at, whether it's younger or older client, you need to be good at pitching whole. Like I had a guy yesterday, he got declined America. We did Moo, got declined. Then he tells me, oh, I had nitroglycerin in my history. So I did Senior Choice as my backup. And now I'm like, look, I had to change my pitch to the critical period coverage.
I actually am so glad you brought that up because I was just in Minnesota and I don't have the same struggle here in Phoenix, but for some reason I was sitting with a lot of people that wanted term that were in kind of that age that could do both. And so I sat down, talked term with them. And then once I got declined, I literally was getting declined like all four. I was doing Americo, Moo, Am, John Hancock. And now I'm like, okay, so now I'm shaking their hand and leaving because I don't know. I personally don't know how to pivot. So I'd love to hear what you do in that instance.
Yeah, that's a great one. And I deal with that so much. So I don't like to show my cards when I walk into an appointment, whatever, if it's an instant lead, younger, if it's mortgage, whatever it might be. So meaning I'm not sitting there selling you on this term when even if you're telling me your health is good, like this dude's like, yeah, I'm 55, I take blood pressure. Obviously you'd think, okay, I could go any term. So I don't play my hand. What I like to talk about in those instances is there's two types of mortgage protection. There's the term style that covers a bigger number, typically for a shorter period, depending on your age. Then there's the permanent style that will save you money. So again, I always use saving money because if we have to go there, oh man, that was cheaper. If you're telling me right in the beginning, you have something major that you can't get term, but I know you could get like an Eagle, I'm going to all of a sudden tell you how term is the worst thing on the world to ever get. Because guess what? If you can't get it, it is. The greatest insurance is the one you can get. If you can get AIG, it's the greatest. If you can get HMS, it's the greatest. So I think you have to communicate it that way. And then I start leveraging off of things like most people that I'll meet will have at older ages a good amount of equity, right, on a mortgage because they've refinanced. They've been in their home a long time, whatever. I'll always play the game with the equity and how this protects the 2 years or a year. I'll say things like typically people will get a year to 2 years worth of mortgage payment protection. You have so much equity. Your budget is X. This fits better in your budget. Do you always win that battle? No, but you'll win it a lot more times than you lose it. Because if I then say to you, you know what, if you did the term on this, it's going to cost you $600 a month, but this one's going to be $150. They love $150. And it makes more sense to them. And then you're talking about it's permanent. It goes forever. It won't run out. It builds cash value. Like you're building value in it. On an Eagle, let's say you have terminal illness coverage. So that's okay, quote unquote, a living benefit. So you're building value in it and you're also gearing it towards what they can get, what they can afford. And then there are times I might run them on the term without even like talking about anything. Like I'm not telling you about living benefits. I'm not telling you about anything. If I feel it's a little bit, it could go one way or another, I'll say, hey, I'm going to run you through the first stage of this. We're going to see what comes up. And then I'm going to know what type of plan I think we can get. So if they get through it, awesome.
Right.
Go on, you're going to ask something.
Yeah. So you run that, right? You haven't established what they're doing. So you run the MIB for Americo, HMS, for anyone that doesn't know. You don't have to put in a dollar amount, just put in a dummy amount. Now, Steve, you get there, they get declined. Are you telling the client that they're declined, or are you now just completely down talking term and upping the permanent?
Well, I never spoke of term to begin with before I ran it. I just ran it. I will tell them, I'll tell them they were declined on that style. And I'll say things like, that was going to be more of the more expensive option anyway. Whatever. Like I'll talk about how it wouldn't have made as much sense, but I'm careful with my words. And then I'll go and show. And look, I never showed you a price. I never showed you years. I never showed you what it did. I didn't show you anything. I just ran your stuff. And then if they get through it, awesome. Great. This is terrific. Living benefits is the greatest thing ever. It's the way to go, blah, 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 blah. That's how I try and play it. I don't want to walk in and be like, awesome, you're 73. Oh, you told me you're healthy. Let's get a term. And then you get declined and then I'm toast.
Yeah, there's nothing worse when you think that you've got it, you have someone willing, they want the coverage. I dealt with that so much just recently. So I know other people are going through it. It's just, they're excited, they want the coverage, you can't get it for them. And then I'm like, how am I supposed to pitch 30,000 when they just told me they wanted 250 and I made it seem like I could? So that was my fault. I lost those sales because of me, not because of them. So I really appreciate you sharing that. I think another thing, with you being here, you're a top producer, you're now executive vice president. Is there anything for these new people that are on here that you would share, like anything you would have done differently if you could go back, or hard things that you learned, the difficult way, right? Things that you wish that you didn't have to learn that way. What would they be?
Definitely. I think on the hiring side of things, I would have gotten staff sooner. I think I probably got staff, let's say maybe 8 months in. I definitely should have I don't think I saw or understood the business side of it early, and that's my fault. And I should have had a staff sooner because I had the money coming in clearly with what I was writing to get the staff going quicker.
Yeah. How'd you keep up with all your sales without having a staff for 8 months? Like, I was writing 25, 30 my first few months and my head was spinning sideways.
Yeah. Just, you don't sleep much. I can tell you that. Yeah, I think that was a big thing. I think I should have looked at the business opportunity. So if you're someone new, look at this like a business and not like I'm just a personal producer. Everybody can go out and personally produce. It's a matter of leads, work ethic, getting good on the phone, getting good in the home, tripping over yourself a lot of times, making mistakes and figuring it out. So you can write. Target to write 30. So then you can have money to have one staff recruiter to then start eyeing, okay, if I'm going to get office space, what am I doing in the way of recruitment as far as different platforms? Obviously work with your upline. You have a great upline, of course, that will help you. So I think if people can look at it that way, as opposed to just saying, all right, cool, like I'm starting and I'm a producer. Now, look, you're juggling two hats, which is fine. But if you're writing 30 and you work a full-time schedule and you then take your other time after your dials to do your recruitment, you work with your staff, you have somebody that's recruiting while you're in the field, you can get yourself growing quickly. And I mean, look, the amount of growth that we see in groups that do it very fast is amazing, and you can do it too. So that's what I would tell the new people starting out.
I love it. I love it. And then what are your goals this year?
Yeah. Only one big goal is we have to be board member by December. That's the biggest thing. I mean, personal production. I mean, I don't know. If I do, I mean, I'll probably do $1 million something. The goal is if I do 1.5, it's $100,000 bonus. That's going to be hard. I don't know if I can do it. We'll see.
Yeah.
But the goal is board member.
Yeah. I think you'll be fine with $1 million. I mean,
yeah, I'll be fine.
Maybe.
I'll be fine.
Yeah.
I'll live.
Awesome.
Yeah. Yeah.
No, what were you going to say? Go ahead.
No, I was going to say, yeah, the growth and the board member thing trumps anything else because there's just a bigger prize here than just personal production. Agreed.
Well, I appreciate your time. Most of these will do like one-off trainings and in-homes and things like that. But I really just wanted to get some nuggets and word tracks of the things that you're doing in home to be successful. So I really appreciate you taking time out of your day. I look forward to your successes. I have no doubt that you'll be board member. So, keep going at it. I appreciate it.
Awesome.
Thank you so much.
Appreciate you guys. Thanks,
All right,
Erica.
have a good one. Okay. Bye, everyone.